Good morning everyone. Welcome to the channel. Welcome to the video. I hope you guys are doing well. So in today's example actually I'm showing you about the price action of yesterday and what happened yesterday. Okay. It was a bit choppy day. I know a lot of you would have caught something, but for me it was not a good day. I mean, by not a good day I didn't mean that I lost like tons of money. No. I just lost like maybe $80, which is close to break even actually, and it was due to me entering the market on a 1 minute time frame. And every time I've noticed that every time I enter the market on a 1 minute time frame, I make some problem, some sort of problem. So I have decided to for myself that I'll only enter on the 90-minute cycle, or if I'll see a crack in correlation in the 90-minute cycle. And it has been working out good for me. Like, I've passed my challenges on the entering the 5 minute time frame and 90-minute cycle, and it clicks every time. For you, for example, it will be the daily cycle. For someone else it will be the weekly cycle. For me, it's the 90-minute cycle would be the perfect entry. And by entry I mean, it gives me sort of a confidence, and I practice patience, my zen, right? That whatever target I choose, it gets hit. Like, this is something what I've noticed. So yesterday, if you'll see, this was the true open. Let me go to the 15-minute time frame. This was the true open of yesterday. This candle right there. Okay, I don't know if I'm choosing. Yeah, and you can see how price was just chopping around the true open here, and it was just gravitated back towards the true open of yesterday. Why? Because this was the reference point, the dynamic premium and discount zone, I would say. And this is the earnings of Nvidia. I don't know what the news was. I haven't checked yet. But since today we have Thursday, right? And we have generated sell side and buy side both, right? This is a range for us as a reference point. And we have what? The true week open for Nasdaq is right there. Anything below the true week open, any crack in correlation, right, below this would be a buy signature. Why? Because the narrative still is bullish. Like, we have a lot of low resistance liquidity resting here. Okay, and it's always if then situation, always. Okay, I want price to do what? Price to form either a failure swing or whatever, and then just gravitate towards the month's true open, the monthly true open. Okay, so it takes a lot of waiting. It takes a lot of waiting for you to frame a trade idea and execute a trade. And one thing you guys should focus in your mind always is that every time you see price above a true open, okay, anything above a true open, you do not buy. Only if there are like stacked true opens. For example, one true open is here and then another one, like maybe 730 and 130 true open is above it. Okay, only then. But if you have like smaller time frame true open below the higher time frame true open, you don't want to buy. At least the idea would be short. And then that's what happened actually over here. If you see the 8 a.m. candle, we formed a daily cycle over here, but everything was short-lived. Like, it was not a good day. I mean, for price action, of course. A lot of you would have caught a lot of good trades, of course. And we are running under this thing. You can see. We took out the New York's low, right here. We took out the New York's low, but we didn't take out the New York's low over here. But currently we have what? A weekly cycle at the highs. Don't get confused. Don't get like jumbled around. It's just keep everything as clean as possible. This is our days open, 6 a.m. open. Okay. Always keep a mark of the 6 p.m. open, not 6 a.m. True open is at here, which is a good sign that we are currently below it. And this is a weekly cycle Kraken correlation right there. People would just want to go short here. Narrative says otherwise. Narrative says we are bullish. We have already established a weekly cycle and a monthly cycle. We already have established. So we are reacting from these lows, right? For example, these lows here. And then I want price to go higher still, right? But before it goes higher, it should accumulate, manipulate, and then distribute. And for that, we need the right time, right price, and a kill zone, or maybe like a red folder news. Okay. And today, that's what I'm expecting actually. I want price to just drop down below here in either scenario, like in any particular asset. In one, it forms like this, and then another one, it just sweeps 2 stages, and then we're golden. Looking at Euro and GBP, what do we have? This low, previous week's low, was taken out, while the previous week's low was not taken out over here. Okay. And if I'll just zoom out a little bit, we have a resting high here, liquidity here, liquidity here. And over here as well, you can see a buy model in itself, right? And currently we are, I guess, the second stage of accumulation. And then over here we have a Kraken correlation on a weekly cycle, right? Now, any particular second stage, for example, if we see something like this, this is the previous day's low. Okay. If we see something like this, and then a minor mid time frame, or maybe a 90-minute entry over here, I would look for buys for Euro and GBP. If then scenario, of course. If not, then no entries, right? Why? Because we have a clear target here. You can see we have clear targets. That's why now you have your where. This is your where. Sorry. Okay. Where price is going? Price is going here. Why is this the thing which I mentioned? This would be the why. This is your why. Where price is going? Right there. Why price would go there is having a Kraken correlation. And it should be below true opens. It should be below at least one true open. Okay. And it should be below if you're trading the weekly cycle, it should be below the true week's open. If you're trading the daily cycle, it should be below the true days open. So everything can be formed with the understanding of narrative. You don't have to rush into any trades. You don't you don't push your ideas into the market. You don't do anything stupidly or take any rash decisions. You will only take rash decisions if you do not have your edge playing out into the market. If you have your edge playing out into the market, you're not going to rush. If you are rushing, and if you are taking any trades which have no basis, no risk management, no entry signals, nothing, and most importantly, no clear target, you are not following your edge. I'm not saying that doesn't mean that you're a bad trader or a bad person. It just means that you're not following your rules at that particular time. That's it. So every time we take such rash decisions, all we have to do is just get back into our senses, get back to understanding where we went wrong and how we can improve it. Simple. Okay. So here, if we have a crack in correlation below the opening prices, I'm gonna look for longs, especially during the New York session. So we wait what the prices or the markets will give us, and we will not make any stupid or rash decisions whatsoever. Okay, so I've given you an idea about what to look for, right? I've not traded like the whole week. I just took 2 trades in the whole week, and both of them hit my stop loss, and both of them were actually on the 1 minute time frame. Can you imagine? Me losing trades is always on the 1 minute time frame. Me winning my trades is always on the 5 minute time frame. That's me. You can have your own edge, right? So follow it. Wait till it clicks for you. Wait till it actually shows itself to you. Then when it shows, you do not hesitate. Full confidence. Charge into the trade. Do not hesitate or do not fear your decisions. Execute. And I hope you found this video insightful. I'll see you in my next video. If you're new to the channel, please subscribe. It really helps with the algorithm. And if you have any particular questions, you can ask in the comment section. I'll see you in the next video. Good luck and good trading.